Hello and welcome back to Bunnex Investment Group. In this video, I'm going to do something that I usually do not do and something that I wasn't an advocate for, but for the sake of my subscribers who have been asking, and actually some of the people who are actually coming and signing up for my course, finding it helpful to apply in volatility indices. Basically, in synthetic indices, does the top 1% traders course apply to these particular assets? The answer is yes. And in this particular video, I'm just going to show you a snippet of how we trade, and then you can actually decide for yourself. All right, so right here on my charts, I have volatility 75 1S. The names of these synthetic indices are actually funny. And these synthetic indices are not moved by economics. They are actually moved by an algorithm. That is, there's a code behind the movement of these assets. If they go to the upside, it's basically a decision that has been made by a code. Right, so basically, these indices also mimic the way we trade currencies. That is, following the market maker cycle, and they also follow the same trading patterns that we use. So in this particular video, I'm going to show you how we can trade these indices using one of our secret patterns, or one of my go-to patterns that I love a lot. In this particular instance, we can see that there has been a choppiness that occurred at this particular point. So I wanted to actually have an asset that will be much choppy and something that will be difficult to see how it is moving. So right now we are on the H4 time frame, and on this particular time frame, all that we can see is a choppy structure, and it's actually difficult to say this was actually going to the upside or downside or any side. But the fact that we know how to trade, we are going to mark this as our lowest datum, or our smallest or the lowest point that is available to us. So after marking this low, the next thing is now to see what happened after that low was issued, so that we can get a proper entry point. Right? So in market maker or institutional market maker method, we actually talk of these crossovers. Right on my charts, I have the EMAs that I use on this particular channel, which are 50, 13, 50, 200, and 800. And the smallest ones being 5 and 13. So the one in yellow, 5, the one in red, 13, the one in blue, 50, the one in gray, 200, and the one in dark blue is the 800 EMA. So basically, when we see this crossover of the 1350 in our rules, we start to say we now have a level 1. A 1350 EMA cross with a corresponding impulse, we call that level 1. So in this particular case, I'm going to box out that particular level 1 that I've just shown you, so that we can actually start our count. So we had the first push to the upside. But whilst we were going to the upside, we can see that the market went to the upside to this high, or actually this high, came back and then went again to this high, but took out this low. Therefore, this means this is actually level to the upside. Level 1 was actually issued, as we can see, to the upside. So I'm going to box it out, and probably this color is okay. Then from there, we can see that there was a 250 EMA cross that was issued at this particular point. So whenever there is a 250 EMA cross with a corresponding impulse to the upside, we actually say level 2 has been issued. Therefore, we had this as our level 2. So in this particular instance, we can now start to say we had a peak formation low here and another peak formation low here. Marking those peak formations, we can see that this was a peak formation, which I'm going to, let me put this color so that we can clearly see. A peak formation was issued here, another peak formation was issued here, and then we can see the market came back to retest this 50 EMA on this particular H4 time frame, meaning this was a peak formation low that was issued. We always say when we have one impulse on the H4 time frame to the upside or to the downside, we expect to have 3 levels within those H4 impulses. So to verify so that we can actually clearly find entries in the future, we just need to verify before we go any further. So going to the H1 time frame, this is how it looks, right? On the H1 time frame, we can see that we had the first push to the upside. We had an ID 50. So we are going to mark it like this. We had, let me change the color. We had a push to the upside, and then we had an ID 50. This was a point of entry. Whenever we have a peak formation low and a pullback to the 50, we get a point of entry, right? After that, we can see that we had this impulse to the upside for the second level. Then after that, we can see that this particular low was not taken by this low. Therefore, we can actually say this was now the third level to the upside, meaning that in this H4 level 1, we had 3 H1 levels, meaning this level was actually complete. Then after that, we can see in this particular instance, we marked this peak formation low. We can see that there was a 1350 EMA cross for level 1, and the market pulled back to give us the ID 50. And then from there, we actually had push to the upside, basically like that. And then we had the last level to the upside like that, meaning this level was actually correct. So these were points of market entry. And then here we can see there was a peak formation low, which was a W pattern. And after that W pattern, we had a 1350 EMA cross to the upside. And then the market came back to retest this low, this 50 EMA, which was a point of market entry to go to the upside. So in this particular case, you should be long on this particular index since we are now working towards completing the third H4 level. We have 1, 2, and then we are now working to complete the third H4 level, which still has 1 H1 level. So this was basically to show you that these instruments actually follow the same concept that I teach in the top 1% traders course. You can actually learn to do all this in a simplified way, a way whereby you do not need to count all these levels, you do not need to verify all these levels, but go straight to the H1 time frame and find a point of market entry with high accuracy. The good thing about these things is they do not have a fundamental influence like currencies. In currencies, we have been experiencing hurdles due to the fact that is happening by a potential trade war escalation by Donald Trump, and it has been quite a difficult time in the currencies. But in these particular instruments, I've been actually studying them and seeing that it's actually similar structures that are presented. And with the top 1% traders course, which is going for $60, you can actually pin the real points of market entry. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.